Hi guys, let's talk about Tesla again today since Q4 earning will be released on January 27th. Now, as of the time of my recording, Tesla has hit an all-time high of $900 with a slight pullback to 880, but that is just a temporary pullback. Now, Tesla had a record quarter of delivery and production in Q4 2020 in the middle of a pandemic. I expect a record earning as well as ambitious guidance for 2021. But what is record and what is ambitious? Well, we'll find out in this video, okay? I don't think that a short-term stock price is going to matter in the long run for this company, which will transpire and disrupt the transportation future. But it's important to kind of see the various scenarios to understand where Tesla might end at the end of this week, at the end of this month, and the end of this year. So strap in, grab popcorn, and let's watch the show. So here are the set of financial numbers that I will be walking you through. This is built off of historical income statement. Here you can see that I break out the number of vehicles delivered. Here, the average selling price, the revenue attributable to automobile sales, to energy sales and service sales, and the total revenue here. From there, we arrived at gross profit or gross margin. And then we subtract other expenses, R&D for research and development, SG&A for sales, general and administration, and other to arrive at operating income. And then we have other non-operating related income, net, such as interest income, interest expense, tax, and other expenses, and so on and so forth to arrive at net income. So let's walk through some of the numbers here. Automobile revenue is pretty much the number of units sold multiplied by the average selling price. And then I would add energy and service revenue to arrive at the total revenue. Since Tesla had a record quarter in Q4, sold over 180,000 units here, which is a 29% increase quarter over quarter and almost 36% increase year over year. I expect this quarter not only to be profitable, but profitable by a wide margin. So I have two variables here in this projection. The first is the average selling price per unit. So this is lower than previous quarter. You can see previous quarter for 2020 runs between 54 and 58,000. So I put mine at 53,000 here. Given the discounts that Tesla usually gives toward the end of the quarter and the increase in efficiency that it has in both Giga Shanghai and Fremont, lower average selling price makes sense. The second variable is the gross margin percentage, which is right here. I also lowered from the last quarter. The gross margin is essentially the difference between revenue and cost of producing such revenue, which is cost of goods sold, which includes raw materials, labor, and overhead. This percentage in an ideal condition should increase over time as Tesla gains efficiency and have more units to sell. The cost per unit should go down. But here I increased it compared to the last quarter. My reason is that Shanghai had the third shift and that should increase overhead and labor as well. So with that in mind, let's take a look at the numbers. So I project that automobile revenue to be at 9.57 billion and total revenue including energy and service at 10.77 billion. That yields a gross margin of 2.47 billion. Then I have estimated expenses here, which is very similar to several last quarters. What I need to note here is that I lower interest expense to 130 million instead of 160 million in past quarters. We know that Tesla raised equity twice in the back half of 2020. That gave it $10 billion in cash. So I could foresee that it pay down some of its debt, thereby reducing interest expense. So this put the total net income at $813 million, which is this number right here. And that put the earning per share for the quarter at 86 cents. And a total earning per share for the entire year at $1.31. So for perspective, analysts estimated that Tesla's revenue ranged from $9 billion to $11 billion and earning per share from $1.15 to $2.97. Now, back to my analysis here. I also add a sensitivity analysis where I further lower the average selling price to 52,000 and lower the gross margin percentage to 22% as opposed to 23%. So my base case is at average selling price of 53,000 and the gross margin at 23%. So now this is the part where we project the stock price. So this area right here is where I project the stock price. For stock price projection, I add another variable, which is the PE ratio, which is price to earning ratio. This shows how many times of the stock is trading. So for example, when Tesla was trading at $846, it was roughly 1,600 times earning 52 cents. For perspective, Amazon's PE ratio is 96, Shopify 739, and Zoom 226. So Tesla PE ratio of 1,600 is very rich. That said, it shows how much growth the market projects in this company, surpassing that of Amazon, Shopify, and Zoom. As Tesla continued to grow following the actual performance of 2020, 2021, the PE ratio should reduce. By 2040, I expect that Tesla PE ratio would be around between 25 and 40, similar to that of Johnson & Johnson and Coca-Cola. But that essentially tells you that from now until 2040, I think Tesla has a lot to grow. I don't expect to see double-digit PE ratio for Tesla anytime soon in the next 5 years, given the growth trajectory that it has. So let's go to the price projection summary here. I added a wide range of PE ratio here from 800 all the way to 1100. Note that Tesla has been trading consistently above 1100 in the last few months, so anything below 1100 is a significant improvement. So at 1100 PE ratio and 53,000 average selling price and 23% gross margin, you're looking at over $1,400 per share in stock price. And at 22% margin, we're at $1,000 per share. So you get the general idea here. I think anything below 1,000 is probably unlikely, but it's there for your reference. In the worst case scenario, in my projection, Tesla is still above 681. And if it does reach 681, you know what? I'm going to town, buying more stocks. So here is where I think the sweet spot would be between 1,000 to 1,100 PE ratio. And if we look at these numbers, the average of them is roughly $1,056. So I do expect Tesla to end in the next few weeks in the thousands. And I don't know whether or not there is a short-term pullback, but any short-term pullback is an opportunity to buy, in my opinion. So let's run with our imagination, right? If we were to put this number to 1,200 at 53,000 in unit cost per unit or price per unit, and 23%, you're at over 1,500 in stock price. Now, I don't think we should go any more than 1,200, even though the market is trading at 1,600 right now. I think that's a little bit irrational. So just to kind of give you perspective of where the stock could be, depending on the PE ratio, which is what the market assigned to Tesla to be Tesla's growth rate. So what on the upper end, we could see 1,500 by the end of the year. I personally don't think that we'll get there. I think that we'll probably hovering around 1,000 to 900 PE ratio. I think these two numbers are more realistic in my opinion. And you can see that the market cap ranges between 1.1 billion to 1.2 billion at the stock price. So I hope that that is helpful to you guys. I do not know short term what the stock will do, whether it will spike, whether it will dip, whether it will fall into a correction, whether it is a full-blown crash. I don't particularly care, even if Tesla moved down to about 20 to 30%. The fundamental of the company is very strong. Unless and until Elon Musk and his company cannot execute, cannot build more factories fast enough, and fall behind in supplying to the current market, I don't see the fundamental of this company changes at all, and I will continue to buy the stock. I hope you find this video helpful. I look forward to reviewing the actual earnings with all of you. Until then, please consider subscribing to my channel and allowing me to create more similar content for you guys. Thank you very much. I appreciate all of you.